Today, we're diving into one of the hottest debates on the market: why have top exchanges like Binance and Bybit not yet listed PiNetwork? Stay tuned as we break down the expert insights, explore tokenomics, and discuss community theories that might be influencing this decision. And remember, what we discuss today is for informational purposes only, so always do your own research before making any investment decisions. Let's get into it. PiNetwork has captured the attention of many crypto enthusiasts over the past few months, but there's a big question mark hovering over its future: why haven't major exchanges listed it yet? While some whispers suggest that a listing might be on the horizon, one prominent voice in the crypto space, pseudonymous analyst Dr. Altcoin, has offered a perspective that is worth our attention. Altcoin points to a potential red flag: a lack of transparency by the Pi core team. Specifically, the details surrounding PiNetwork's tokenomics, such as the locking and burning mechanisms for the billions of Pi coins, remain shrouded in mystery. This lack of clarity might be exactly why top players like Binance and Bybit are treading cautiously. Let's unpack this. Tokenomics, the heart of any crypto project, essentially outlines how a cryptocurrency's tokens are distributed, circulated, and potentially controlled through mechanisms like locking and burning. In the case of PiNetwork, there are significant concerns regarding how transparent the Pi core team has been with these critical details. Dr. Altcoin, in a recent post on X, highlighted that the Pi core team has not provided clear, comprehensive information about how billions of Pi coins are managed through locking and burning. This ambiguity can lead to misunderstandings, and worse, might be misinterpreted as a tool for market manipulation. For example, if large volumes of tokens are locked away or burned without clear guidelines, it can create artificial scarcity, a factor that might drive up prices, but also lead to unpredictable market behavior. Without full disclosure, exchanges like Binance and Bybit might be hesitant to list an asset that could pose risks to their users. They need to ensure that the underlying mechanisms of a project are robust, transparent, and above board. Without that level of transparency, even the whispers of a promising token can turn into red flags for security and market fairness. Now, let's take a closer look at PiNetwork's tokenomics. Recent observations indicate that the circulating supply of PiNetwork tokens has decreased to about 6.77 billion. What does this mean? Essentially, the Pi core team recently removed 10 million coins from circulation, an action that, according to Dr. Altcoin, could be seen as a method of price control. Think about it: when coins are removed from the circulating supply, it can create a sense of scarcity. Scarcity, in theory, can help bolster a token's value, but if it's done without clear communication and transparency, it may raise concerns. Investors might start to wonder if these actions are part of a well-thought-out strategy or if they could potentially be used to manipulate market sentiment, especially before a major event like a token unlock. A previous token unlock was associated with a significant price drop, and while the development of a burn roadmap might help stabilize prices, the lack of upfront, clear details remains a sticking point. Transparency here is not just a good to have, it's essential for building trust in any crypto project. And without it, exchanges are naturally cautious about listing the asset. Of course, not everyone in the PiNetwork community agrees with Dr. Altcoin's theory. There's an alternative narrative circulating among community members. Argue that the delay in listing isn't due to a lack of transparency at all, but rather a strategic decision by the Pi core team. According to these community voices, the Pi core team might be aiming for a free listing on exchanges, avoiding the hefty fees often associated with securing a spot on a major exchange. Instead of spending large sums on listing fees, they might be waiting for an organic, market-driven demand to build momentum, albeit at a slower pace. So here's the million-dollar question: are we looking at a case of mismanaged tokenomics and a lack of transparency, or is it simply a strategic play to save on costs and build community-driven momentum? While both theories have their merits, it's important to understand that until the Pi core team provides more concrete details, the debate will continue to rage on in both the professional and retail spheres. So, what does this mean for investors and the overall market? Let's put things into perspective. PiNetwork is currently trading at around $1, which is significantly down, about 66% from its all-time high of $2.98 set in February. Such steep declines can trigger panic, and in a market as volatile as crypto, every piece of information becomes crucial. For investors, this situation is a stark reminder of the importance of due diligence. Whether you're a seasoned trader or just dipping your toes into the crypto waters, understanding the underlying tokenomics and the strategic decisions behind them is key. When major exchanges delay listing a token due to transparency concerns, it signals that there might be unresolved issues that could affect the asset's future performance. While some investors might view this as an opportunity to get in at a lower price before potential improvements and increased transparency lead to a market correction, others might see it as a red flag and choose to steer clear until there's more clarity. Ultimately, the decision boils down to your risk tolerance and investment strategy. It's also worth noting that market sentiment can shift quickly. If the Pi core team steps up its transparency game and clears the air, we could see a renewed push for listing on major exchanges, which in turn might lead to a price rally. But until then, a cautious approach is warranted. Now, let's talk about what the Pi core team should ideally do to address these concerns. Transparency is the cornerstone of trust in the crypto world, and there are a few key steps they can take. The team should provide a comprehensive breakdown of how the locking and burning mechanisms work. This includes the rationale behind the removal of coins from circulation and how these actions align with long-term project goals. Whether it's a token unlock or the implementation of a burn roadmap, clear, scheduled communication can help investors better prepare and adjust their expectations. Regular Q&A sessions, detailed blog posts, and transparent updates on progress can bridge the gap between the team and the community. When investors feel informed, they are more likely to trust the project. Commissioning independent audits of the tokenomics and the overall project structure could serve as a seal of credibility, reassuring both exchanges and investors that everything is above board. By taking these proactive steps, the Pi core team could not only pave the way for a successful listing on exchanges like Binance and Bybit but also build a stronger, more loyal community that's confident in the project's long-term vision. Looking ahead, the future of PiNetwork remains uncertain but full of potential. The current situation is a pivotal moment, a test of both the project's internal strategies and the market's patience. If the team can address these transparency concerns, we might see not just a listing on major exchanges but a significant market rally. Remember, though, in the volatile world of cryptocurrency, today's news can be tomorrow's history. The key takeaway here is the importance of transparency and clear communication in building trust. Whether you're investing in PiNetwork or any other crypto asset, always look beyond the surface and dig into the underlying mechanics that could make or break a project. Alright, crypto enthusiasts, that's a wrap on today's deep dive into the reasons behind the delayed listing of PiNetwork on major exchanges. As always, I encourage you to do your own research and stay informed about every facet of the projects you invest in. What do you think is holding back PiNetwork? Is it truly a lack of transparency, or is it simply a strategic move by the Pi core team? Drop your thoughts in the comments below. I love hearing your perspectives. Here you go, don't forget to hit that subscribe button and click the bell icon so you never miss an update from Zaki Crypto Update. If you found today's video insightful, give it a thumbs up and share it with your fellow crypto enthusiasts. Stay tuned for more crypto deep dives, market analyses, and all the latest trends from the blockchain world. Crypto disclaimer: the information presented in this video is for informational purposes only and should not be taken as financial or investment advice. I am not a licensed financial advisor, and all investments carry inherent risks. Always do your own research before making any financial decisions. Your investments are your own responsibility. Thanks for watching, everyone. I'm Zaki, and this is your update on the ever-evolving world of cryptocurrency. Stay smart, stay safe, and until next time, keep riding the crypto wave.